If you've been holding out for cheaper credit card rates, car loans, or a lower mortgage, you'll have to keep waiting.
The Federal Reserve left interest rates unchanged today, the same decision it's made at every meeting this year. CBS's Kelly O'Grady reports tonight.
Kevin Warsh held his second news conference as Federal Reserve Chair, offering no surprises on interest rates.
Our committee decided to vote by a 9-3 vote to maintain the target range for the federal funds rate at 3.5% to 3.75%.
What it's been since the last cut in December 2025. Warsh noted the country is straddling a resilient labor market and inflation that briefly surged to a 3-year high in May before retreating in June as the war with Iran continues to drive up energy prices.
The committee remains resolute. You've heard this before, but we will deliver price stability.
President Trump suggested Warsh would cut rates if he could.
He's a brilliant guy, smart. I know he'd love to see lower interest rates, but he's got a board, and it's a political board, and they want to keep rates up.
CBS News business analyst Jill Schlesinger says steady rates are good news for savers with high-yield accounts or CDs, but bad news for borrowers.
Credit card interest rates remain high. Small business loans remain high. The cost to go out and buy a new car or used car with a loan, still high. So for consumers, it's a mixed bag.
In June, Fed projections showed about half of policymakers expecting at least one rate hike before the end of the year.
There's a risk of cutting too soon, and there's a risk of hiking too soon.
With inflation stuck above the Fed's 2% target for more than 5 years, Wall Street traders are anticipating the Fed could raise rates at its next meeting in September. At the New York Stock Exchange, I'm Kelly O'Grady, CBS News.